The United Kingdom has 61,000 Bitcoin. It's the third biggest nation-state holder of Bitcoin on the planet, behind only the PRC and the United States. We know that 7 million adults in the United Kingdom hold Bitcoin and crypto. It means that every single cryptocurrency exchange has to have disclaimers and wording and what are called sort of customer frictions to effectively to put as many barriers in the way of people who will buy these assets as possible. And that's a firm run by Brits who've had to issue out of Guernsey, list in Amsterdam. Why are we not doing that in the United Kingdom? We used to be the hub of global finance.
Hello and welcome to the IEA podcast with me, Jamie Legg, the Digital Production Manager here at the Institute of Economic Affairs. Today we've got a special guest, Freddie New, back on the podcast. He is the Chief Policy Officer at Bitcoin Policy UK. The topic that we're going to be covering today is last week's Reform Crypto Policy Bill that was announced by Nigel Farage at the Bitcoin conference. So, Freddie, welcome back to the show.
Thank you very much for the invitation. Nice to be back.
Good. So, just to get started, what is cryptocurrency and why should we care about it?
I think it's worthwhile starting by saying that cryptocurrency is a very broad church now. So when people, and particularly regulators and the government, refer to crypto, they're often referring to a very, very broad set of different things which all have perhaps one thing in common. And an analogy I'll probably return to a couple of times is a company analogy. So most people are familiar with companies which have shares and shareholders and directors and so on. Of course, there are a very, very broad gamut of companies ranging from blue chip companies listed on the main market all the way down to companies that you can start in your kitchen with one shareholder and directors. So while they all share some characteristics, they are very, very widely different. So the cryptocurrency market as a whole seems to be splitting into a variety of different, I suppose the term of art ordinarily used by regulators at the moment is digital assets. And those cover a very broad selection of different categories. Some of those digital assets are more monetary in nature. Some of them are, to my mind, are more akin to gambling. And some of them, your listeners may be familiar with NFTs, are more similar to digital collectibles or pieces of artwork. And again, one of the points I'll probably make later in the chat is that at the moment, unfortunately, our regulation treats all of those different categories of items in exactly the same way. Whereas our organization tends to think that a token that is primarily used for gambling is very different from a token that may be a digital collectible, and again, different from a type of digital money. So perhaps giving you some specifics, starting with Bitcoin, the most well-known cryptocurrency. Bitcoin is essentially a hard-capped, limited supply digital money without a centralized issuer or processor like a central bank or a commercial bank. Next category that I would highlight are stablecoins. Stablecoins tend to be pegged to a particular fiat currency, let's say the dollar, the euro, or the pound sterling, the dollar being the most common kind of stable currency. Your listeners may be familiar with Tether or with USDC, which is issued by Circle. And the way a stablecoin works is a digital token is issued on one or more blockchains, and that is backed one-to-one by a piece of treasury paper, let's say, or a gilt. And so long as that digital coin remains in circulation, the issuer of that coin, be it Tether or be it Circle, for example, is supposed to hold on to that piece of government paper that backs that coin. And the idea is that provides stable one-to-one parallel with the fiat currency. Then probably the next category I'd highlight are meme coins. These are very akin to gambling. They're very easy to issue. People will issue them on a blockchain like Solana. And they are, I've got nothing against gambling. It's perfectly lawful if that's what people want to do with their money. Meme coins are not money. They don't really have any monetary characteristics. And frankly, I think most of the people who invest in them or who play this game know that as well. And finally, I think you have NFTs. Now, those were very big 3 or 4 years ago. NFTs are one of the hardest things, I think, for people unfamiliar with space to understand. And perhaps we should unpack a little bit why cryptocurrency is so interesting from a digital perspective. So an NFT, for anyone who's unfamiliar, it tends to be a digital picture that you see on your computer or your phone, but it's supposed to be, exactly as it says on the tin, a non-fungible token. Namely, it can't be exchanged for anything else, and it's also essentially uncopyable. So in the realm of digital assets, it's quite interesting for people like ourselves who've grown up accustomed to everything digital being incredibly easy to copy. It's hard for us to understand how blockchains can prevent digital artifacts being copied. And again, using Bitcoin as an example, the way Bitcoin achieves this is because a Bitcoin, in definitional terms, is nothing more than a chain of digital signatures. The way that the way the blockchain works is that in order to indicate that value has moved from one person to another, you require two things: a public address, which is like your account number, which you can give to me, and then a private key. So in order for me to transfer some Bitcoin to you, you would share with me your public address, and then I would move Bitcoin from my entry in the ledger, my address, to yours by signing that transaction with a private key. Now, this probably isn't the place to go into the depths of the cryptography behind how this works, but unless I am able to sign that transaction with my private key, no value moves, and the private key is so extraordinarily difficult to backwards engineer or to decode that it's essentially impossible given the laws of physics as we currently understand them.
Right.
And then that once you have that Bitcoin in your wallet, then you can do the same again. So there we have a chain of digital signatures. The key thing to understand about this kind of system is that you can't right click and save down. You can't copy it very easily. And that, I think, is what is difficult for some people to understand, because we've grown up in a world of endlessly copyable digital abundance.
Yeah. Well, no, thank you for that thorough detail. I find it just quite amazing, really, with just the sheer scale of different use cases. You say stable coins and more monetary kind of coins like Bitcoin and whatnot. Just focusing kind of on that monetary aspect. So if you could just say to the audience, how does this difference, say like Bitcoin or other ones that you potentially classify as more monetary basis, how does this differentiate between like fiat currencies or just currencies that are issued by central banks like the Bank of England or the Federal Reserve?
Okay. Interesting question. They're fundamentally different in some ways, but very similar in others. So possibly the first thing to understand is that predominantly today, virtually all money in circulation is a liability of someone else. It's effectively credit money or liability money. And whether that is a liability of the central bank or the liability of a commercial bank, there is always a third party involved who owes you that money. So again, breaking it down to elements that we're familiar with on a daily basis, when you deposit £100 note into your bank, £100 in notes into your bank actually then owes you £100. So you may pull up your Barclays, your NatWest app and see that you've got £100 in your account. That's actually a liability owed to you by Barclays or NatWest. And so you have a right to claim in the amount of £100. You're probably as familiar as I am with what's written on each banknote, which is, I promise to pay the bearer on demand the sum of £10, £20. That is a lot. Each banknote, interestingly, it's both a bearer instrument and is also a liability of the central bank. And the liability of the central bank is essentially, I suppose, as has been said by, I think it was Neil Kashkari of the Fed Reserve, there is an infinite amount of cash at the Federal Reserve, and he's not wrong. The Bank of England can endlessly satisfy those claims made on it because it's capable of creating new currency at will. And of course, that's one of the reasons that a hard capped money like Bitcoin might become more attractive. And of course, I think it's fair to say that Bitcoin is obviously not the only hard cap money out there. Gold has a similarly hard cap. I think I would compare Bitcoin to gold in as much as Bitcoin is often called a commodity money, but in digital form. Gold was, of course, a commodity money, specie. And the reason that our banknotes have that statement on them, I promise to pay the bearer on demand, is because you used to be able to exchange your banknote for an equivalent amount of silver, sterling silver. And obviously that's where sterling comes from, the word sterling.
Right.
That's no longer the case. This is we're talking sort of about fascinating pieces of the history of money here. And when people say, what's your money backed by? The pound actually isn't backed. It used to be backed by silver and gold by the bimetallism era. And you used to be able to get your specie, your silver or your gold from the bank. That's why it has a promise on it.
Right.
Now, almost all monies are backed by the full faith and credit of the United Kingdom or the United States. There's really nothing there other than that credit. And then contrasting that with Bitcoin is not a liability money. It is no one's liability. It is in and of itself, and it exists independent of any bank or any institution. And on that front, it actually has arguably lower credit risk than money that you hold in NatWest. For example, if you're guaranteed up to the deposit limit, which from memory is 85K. I may be incorrect there, so might be worth checking that. But beyond that, then you're exposed to credit risk at your banking institution. Nothing like that exists with Bitcoin.
Right. Okay. Yeah, that's really interesting. I've heard the term, digital gold a number of times. So, and also I've heard about, Bitcoin is final settlement instead of, like you said, if you're paying things with Visa and whatnot, that's not actually final settlement. Is that correct? Yeah.
Yes, exactly. That's a good analogy, actually. So making a Bitcoin transaction on the base layer, as we discussed in response to your first question, that's effectively final settlement. People may be familiar with the idea that, let's say you bank with NatWest and I bank with Barclays. If we make a number of transactions between us, we will see those transactions reflected in our accounts almost instantaneously, but final settlement will only take place quite a long time later, in some cases several days, once NatWest settles with Barclays in respect of all of the different liabilities that have been created over that period between NatWest and Barclays. So there'll be one big transaction between the two banks, often via a clearing bank like the central bank, particularly in the case of international transfers. And that's similar to a base layer transaction in Bitcoin.
Right. Okay, so you're kind of giving a good picture of the differences between Bitcoin or other cryptocurrencies on a monetary level compared to central banks and stuff. How does kind of cryptocurrency and the concept kind of align? It seems like it strongly aligns with classical liberal kind of ideology or views. Is that kind of ideology felt throughout the whole space, or was it kind of its origins? Or if you want to just talk a bit more about that.
Sure. So perhaps starting with its origins, a lot of the ideas behind Bitcoin came out of the Cypherpunk movement in the 1980s. So your audience may be familiar with the crypto wars during the 70s and 80s. There was increasing concern in the United States around strong cryptography and whether or not that should be allowed to be used by regular individuals.
Right. Okay. Yeah. I doubt many of the viewers are, but yeah, interesting left. But go on.
Well, the outcome of this was a very famous case, Zimmerman versus the United States, where ultimately Zimmerman was he was one of the key people behind what's called PGP cryptography, pretty good privacy. And the United States was so concerned about this that they tried to classify PGP as a munition and prevent its export from outside the United States. This extraordinarily incensed the developers and the cypherpunks at the time. And it got to the point where cryptographers like our own Adam Back, who's a Brit, produced a large number of T-shirts, and he printed the code on T-shirts and walked through United States Customs on his way to and from the US, freely displaying the code on his shirt. And then Zimmerman ended up publishing the code in a book, and therefore had the protection of the First Amendment under the United States Constitution.
Right.
And although the case was dropped by the United States government before it finally came to the Supreme Court, the general principle that Zimmerman was arguing was that code is speech, and that speech is therefore protected under the First Amendment, and therefore if you follow it back, code is also protected as a First Amendment right under the United States Constitution. Before we get into the monetary principles, I think that's a really important thing to hold on to, that the freedom to write code is inherent, and it's inherent in the United States under the First Amendment, should be inherent here as well. Whatever happens to the code once you've written and published it is no concern of yours as the developer of that code. But that for me is a fundamental principle. It started with free speech.
Right. Okay. That's interesting.
And then we move from free speech into what I think is a very fundamental freedom, which is the freedom to transact. You and I should be able to transact with each other for any lawful purpose. And Bitcoin enables that transaction to take place, even if an authoritarian regime were to try and stop us. As the system is currently built and designed and operates, there is no way that anyone, even the People's Republic of China and North Korea, so the most authoritarian regimes in the world, they cannot stop us. We work with a lot of humanitarian and dissident organizations around the world, and Bitcoin is used very much for this purpose. It's a money that enables you to keep transacting freely, even when an authoritarian state wants to stop you from doing so. So I think that's quite a fundamental and important principle.
Yeah, no, that's amazing. Yeah, obviously, I think I'm aware of the monetary side of it, of the free exchange, but I didn't know its roots was actually in actual free speech. Yeah, because I guess it is just it's code, and if they were going to kind of put laws in place for that, it's fascinating. So I guess reeling it into the main point of this interview is that in the case of just UK regulatory the regulatory system that revolves around cryptocurrency at the moment now in the UK. Could you give us just an overview of where we currently are, how we compare to other countries, the US, EU, and I know that there's even more competitive places, I guess, in Dubai, I believe, and in Singapore. How do we currently regulate cryptocurrencies? Because you said there was a range, such a range, from stable coins to monetary side of things to NFTs. If you could just, I guess, give a quick overview of where we currently are in the UK.
Okay, well, as a caveat to this, if I'm rude about the FCA, it's because I love them and I'd really like to work with them in more depth to try and improve our regulatory position here. Right. So, having said that, I'm allowed to proceed to be rude about the FCA in as polite a fashion as I possibly can. How do we regulate cryptocurrencies in the UK? Very poorly is probably the answer in a nutshell. Unpacking that. Unfortunately, for a very long time, our regulatory position was to stick our fingers in our ears and hope that these things were going to go away. And as you've rightly pointed out, a number of jurisdictions have suddenly realized that these things aren't going to go away and have begun regulating much more thoughtfully and much more seriously than we have. So to give you a few concrete examples, contrast the position of the United States in relation to exchange-traded products with the United Kingdom. So ETFs were approved in the United States in January of last year. They offer a regulated and relatively safe way for people to get price exposure to Bitcoin in the United States. Now, one of the FCA's mandates is to prevent customer harm, and a second mandate is to boost economic growth. At the moment, the FCA have in place a ban that has been enforced since early 2021. And that ban prevents any retail investor in the United Kingdom from getting any form of exposure to any derivative product, an exchange-traded product or exchange-traded note in the United Kingdom at all. So you or I, retail investors, we can't invest in ETF products that give exposure to Bitcoin. Right. However, we can still perfectly easily buy spot Bitcoin, and we can do that from anyone in the world at any time of the day or night in as much in an amount greater or as large as we like. But the key point there is that if the FCA is attempting to prevent customer harm, then why not allow retail investors to invest in highly regulated products that are listed on regulated exchanges instead of pushing investors to potentially unregulated exchanges overseas where they can buy spot? Not that I'm not a fan of buying spot. I think you should. I think you should if that's what you want to do. But I recognize that a lot of people may not have the expertise or the time required to understand exactly how to do so. Why not buy it in Hargreaves Lansdown or in your AJ Bell account or in your Fidelity account? No, say the FCA, you can't do that. And so anyone who wants to buy cryptocurrency is automatically driven to higher risk alternatives. And so I think that is a dereliction of the FCA's duty in terms of attempting to prevent customer harm. If there's a regulated alternative available, make that accessible to people, and thereby you automatically decrease the risk of that person suffering loss. And secondly, it sent a terrible message to the global markets that with the FCA in charge, the UK is completely shut for business. No one is going to be issuing those products in the United Kingdom. And in fact, again, a specific example, we've worked to do a deep dive with a firm called Jacobi Asset Management over the past couple of years. They offer an ETF product, Europe's first ETF product, actually, which is issued out of Guernsey and listed in Amsterdam, and is now available to retail investors in the EU, but not in the United Kingdom because of the FCA. And, that's a firm run by Brits who've had to issue out of Guernsey, list in Amsterdam. Why are we not doing that in the United Kingdom? We used to be the hub of global finance, and I think it's an absolute disgrace that the FCA's actions are driving this kind of ingenuity, frankly, into the EU, seeding it to the United States, and also to other new and up-and-coming jurisdictions like Dubai, whose regulator VARA is far more plugged in, far-sighted than the UK's, and, as you mentioned, Singapore and Hong Kong as well.
So do you think it's we're just dragging our feet with the FCA is just dragging off their feet, or do you think it is just a general kind of attitude against the space in general?
Well, it's a good question. I think it's a combination of a lot of different things. So firstly, the FCA's current head of digital assets comes from law enforcement. He began his life as a policeman. So and again, this is my personal opinion. It's not, I have no basis of fact here. I suspect that a lot of his attitude towards Bitcoin is informed by what may have been true 15 years ago, in that it was occasionally could have facilitated illicit activity. The data today shows that 0.14% of all transactions are illicit. So, close to 99% or plus are actually completely legitimate trading transactions. I do know that in the past, anyone who had any expertise in cryptocurrency at the FCA was politely encouraged to find alternative employment. So I think there's a dearth of expertise at the FCA. And frankly, I've been drafting papers for the FCA and submitting them for quite some time now, in 2.5 years or so. They frankly don't listen to the advice of experts in the industry. I've been working in the industry for a long time. I like to think I'm reasonably well informed about it, from a cryptographic level all the way up to regulatory and compliance. The FCA just don't listen. And in fact, just this week, I was engaged in a conversation on X. And I pulled up their feedback from one of their prior consultations, after which they classified Bitcoin and all other cryptos as restricted mass market investments. The FCA admitted in writing that the majority of their expert respondees had said that this categorization was wrong, and had given detailed analysis of why. And then in the next paragraph, without explanation, the FCA said, having considered this response from industry, we've decided to go ahead anyway with the categorization, which utterly flabbergasts me.
Yeah, because I was under the impression, looking at EU crypto regulations versus here, that ours was currently still, spontaneously growing and in development. But you're saying that actually a lot of this is kind of just not. It's not a thoughtful process. It's actually just more dragging of the feet and just restrict. Basically just.
Yeah. It's piecemeal at the moment. So the FCA's crypto roadmap should be, all of the consultation should have been published and responses received by the end of 26, and the regime should be fully effective by 2027. But bear in mind, this is an incredibly fast-moving area of finance and computing. So trying to regulate at an absolutely glacial pace, ignoring feedback from experts, and then putting piecemeal blocks in at the moment. So the reason I raised the restricted mass market investment provision is that has had a chilling effect on the entire industry in the United Kingdom. It means that legitimate businesses in the UK can no longer really advertise very easily. It means that every single cryptocurrency exchange has to have disclaimers and wording and what are called sort of customer frictions to effectively to put as many barriers in the way of people who buy these assets as possible. And just to give you some numbers, we know that 7 million adults in the United Kingdom hold Bitcoin and crypto. That's quite a large chunk of the population. It's 10% of the entire population, and it's 12 to 15% of the adult population. So there are a lot of people who already hold these things. And the FCA, I mean, not to be rude, they've just been totally caught with their pants down.
Yeah. No, Yeah, don't want to be too rude about them, but sounds like the yeah, sounds how you really feel. So yeah, talking regulation, as you're aware, reform or Nigel Farage came out last week. I think it was at the Bitcoin conference in America. With reforms UK crypto bill proposal. What were your kind of initial thoughts, reactions, and then I think we'll just go through each of the main, 9 points. General kind of, do you think it's going in the right direction? Do you think it's a good kind of start? And that compared to maybe, this government or previous government's kind of initial approach?
Yeah, absolutely right. I mean, my initial response was one of encouraged surprise, I think. So we at Bitcoin Policy UK as an organization have been communicating with politicians of all stripes. So we're expressly non-political and we support good policies, not parties. However, where we see good policies, we will absolutely support and praise them. And the majority of the ideas that were articulated by Nigel Farage were actually very similar to what we've been putting in front of Rachel Reeves in public for more than a year, and which I am sorry to say the Labour Party has completely ignored. In fact, I go further than say ignored. They have sort of belittled and patronised the work that we have done in terms of trying to help them see that this is a real industry. It's going to have important impacts on the way that the United Kingdom economy functions in future, and it directly affects a lot of people in the UK, as I mentioned, 7 million adults.
Right.
Labour don't seem to want those votes. And I think Farage has realised that there is a highly motivated body of people here who potentially might be single-issue voters. And generally speaking, obviously we'll go through them in detail, but generally speaking, I thought it was a pretty decent set of proposals.
And you said that the current government are, kind of almost belittling a little bit. But am I correct in saying that even the past Conservative governments have been pretty awful with approaching this sector?
Yes, maybe this time I wouldn't go quite as far as saying awful, but I think they could have done better. Unfortunately, we began our work, I suppose, in sort of the twilight of the Conservative government. We had good dialogue with Andrew Griffith on debanking, for example. Yeah. Similarly, good dialogue with Bimaf Alami when he was city minister. I met Rishi Sunak twice and I discussed the matter with him. So had they remained in power, I'm actually reasonably confident we would have got a decent outcome, certainly in terms of the political side. FCA is obviously another matter.
Okay. Excellent. Yeah. So let's go through each of the points. This is, I guess, number one that have caught everybody's attention. Well, I guess it depends, but caught my attention was reducing capital gains from what would be 24% to 10%. I can imagine, you think this is a good thing, but how can that affect, I guess, the sector and its growth in the UK, or is it just a good approach for just attracting talent for the space, maybe, or is it just more of a benefit on retail?
I'd agree for talent. It sends a good message. So I think a lot of this is in terms of messaging. How is the UK positioning itself in a growing market, in a highly competitive global industry, which has highly mobile participants? So a tax rate of 10% is obviously attractive to anyone who is holding or working in the space. I'd actually go further, and actually this point hits a couple of their points. So the Lummis-Gillibrand bill in the United States, which was obviously drafted in a prior Congress, did contain some rather interesting provisions around de minimis exemptions, where Bitcoin or cryptocurrency was used as a form of payment. And their suggested de minimis was about $200, I think, from memory. I'd like to see an acknowledgement that Bitcoin is not just a savings technology, it's a payment technology as well. And Farage, I was actually at Farage's speech. He noted in his speech that where taxes are fair, people will pay them. And 10% is, in many people's eyes, I think, a fair rate. So you're likely to have a higher degree of compliance, I think, when people might make a disposal. And at the same time, if we set an appropriate de minimis for where Bitcoin is used as in transactions, then you have a higher velocity of money within the economy, and that's largely thought by most economists to be a good thing. And encouraging people to to spend Bitcoin then has a bit of a flywheel effect, because you have more businesses accepting it, and the general industry as a whole benefits, I feel. But it's obviously a draft proposal, and we will certainly be making that point to reform as we go forwards.
Yeah, I think you've kind of just segued into another point actually that will be that they listed is being able to pay your taxes in crypto. I thought and had a discussion with some of my colleagues of, well, will people actually pay that pay crypto in taxes if there is a 10% charge because you've realized those gains? I guess kind of touching upon what you were saying about
Yeah, exactly. You stole my thunder there, Jamie. That's actually one of the points I'd noted down.
Oh, right, okay.
Yeah. So the point I was going to make there was, that's great to have that capability, and maybe to address 2 points there. Firstly, I think if you're paying taxes in cryptocurrency, there should definitely be a carve out for any tax payments from the CGT net. So, and then once you've accepted that carve out, then you're halfway to accepting a de minimis transaction carve out below an appropriate threshold, towards the velocity of money point I made earlier.
Cool. Yeah, thank you. So the next one, 2-year regulatory sandbox. I know that this is used in other sectors, whether it's finance or technology and stuff. How do you feel about that? Has it been used in this context of like cryptocurrency sector in the world?
It has. Interestingly enough, the FCA have supposedly had a sandbox for cryptocurrency going for some time, and I previously contributed some thinking to that. I'm not certain that without, maybe backtrack a little bit, it's a useful idea, but until we can convince international companies that the UK is a good place for them to do business in this sector, then A, international companies are unlikely to come, and B, homegrown companies are unlikely to emerge. So, backtracking to a point I made previously, the chilling effect of the FCA's generally hostile approach to the entire industry is that the UK is a follower in this industry. So I think having a sandbox is great, but let's make sure that we have a clear and welcoming regulatory regime first, and then people will come and either grow up as a homegrown business or come in as a inbound investment in a foreign-owned business and make use of that sandbox. Let's get the environment right first. So I think my general point there is sandbox is a great idea, but without a welcoming environment, there may not be many people in it.
Yeah. So the next one, the big one, which I actually have a number of questions on, is the sovereign Bitcoin reserve fund. Thoughts? Your thoughts first, and then I'll just chuck a few questions.
Well, I'm keen to hear your thoughts. I'll sort of brain dump on you very quickly. So we've been highlighting for some time, more than a year and a half, to Rachel Reeves and to successive economic secretaries of the Treasury, most recently Emma Reynolds, that the United Kingdom has 61,000 Bitcoin. It's the third biggest nation-state holder of Bitcoin on the planet, behind only the PRC and the United States. And at the moment, we don't seem to know what to do with that Bitcoin. It's, as far as I'm able to tell, it will be distributed pursuant to the provisions in the Proceeds of Crime Act, which state that, following a confiscation order, the amounts are split equally between the Home Office and between law enforcement. So just for context, 61,000 Bitcoin at today's prices is I think north of £5 billion. So roughly enough to pay the winter fuel allowance for most of the rest of this parliament. So it's a pretty large sum of money. It is more than double, I think, the entire annual budget of the Metropolitan Police. So we could do a lot with that. We have had, very, very amusingly, at the same conference where Nigel Farage spoke, J.D. Vance, the Vice President of the United States, also spoke, showing how seriously the United States is taking this, whereas the Labour Party seemed to consider it an amusing joke. And I was sitting in the audience waiting for Vance to speak when I had an email from Emma Reynolds in response to my latest communication with her about the UK 61,000 Bitcoin, being very dismissive about the idea that perhaps because the sum of money was so large, they should consider secondary legislation to amend the Proceeds of Crime Act, specifically to deal with the $5 billion that is going to be released, we think, later this year at the conclusion of the relevant criminal trials. She came out with the same tried and tested arguments about Bitcoin's volatility and how it was unsuitable for a strategic reserve. Obviously, not many people seem to realize that all kinds of strange things end up in reserves. For example, the United States has a cheese reserve.
Didn't know that.
It's very funny. They have an extraordinarily large amount of cheese in a cave in Wisconsin somewhere. The United Kingdom, I believe, has a wine reserve. So
it's important.
Yeah. Well, I can see the merits of that. Actually, combine those two, and you've got the makings of a great evening, haven't you?
That's a great Federal Reserve, I guess.
Yes. So the irritating thing I think about Reeves, about the responses from Reeves and from Reynolds, are that there's no consideration even of doing a feasibility study or any analysis. There's a simple blanket no. And our point is not that we think the United Kingdom should buy Bitcoin. Personally, I'm hesitant about the whole idea of nation states holding it anyway. That's my personal opinion. Everyone's free to disagree.
Yep.
But given that we have £5 billion worth of this, that it is incumbent on the government and on the Treasury to custody that properly and to safeguard it for the nation, for you and me. It's just a dereliction of their duty not to do that.
Yeah, I guess my two questions is, one, I think you touched upon, was I'd be very anxious if they were going to be actually using taxpayers' money to buy Bitcoin.
Yeah.
But as you said, they've already got 61,000 just
61,000 coins. Yeah. I actually completely agree with you. I genuinely don't think that would be a good use of taxpayer funds.
I think it's a bit immoral potentially as well.
Yeah. There's a lot of opposition to doing that kind of stuff anyway. And
I have heard arguments before just against, I guess, sovereign wealth funds of basically, you have to have wealth to have this fund. Right now, the government has a massive deficit, massive debt. So you need to pay off that debt. What are your thoughts on that at all?
That's almost meat enough there for a whole other conversation.
Yeah, true.
I am extremely concerned around sovereign debt.
Yeah.
I'm on record of being so in public many, many times. And I think for an everyday person, knowing that the interest payments on our national debt exceed what we spend on our military and they exceed what we spend on education is a shocking statistic, and it's only getting worse.
Yeah.
So the issue, I feel, is that there is no way out of this other than a soft default via continual debasement of the currency, via ongoing issuance of new money.
Which I imagine is why you think that actually a Bitcoin reserve would potentially cushion that. Is that correct?
Potentially, yes. So when you
don't have to go down the rabbit hole here, obviously. Yeah, maybe for another episode, but
yeah, but stepping away from Bitcoin specifically, I think most people who are fans of hard money and sound money would say that we're effectively helpless in the headlights of government, central banking, commercial banking, who effectively have no choice other than to continue issuing more and more money to service their existing debts. Now, you'll know as well as I do that no nation whose debts are denominated in its own currency will ever become insolvent. They can continue paying those debts so long as they can continue issuing more currency, which, as a sovereign nation who controls our currency, we can. The problem for you and I, exactly, it means that the purchasing power of the pound in our pocket is trending ever more rapidly towards zero. And once you realize that, and you realize that no government is ever really going to stop this process because they can't, the only alternative is to move your deflating currency into hard assets. And I'm not going to tell you what hard assets you should buy.
Yep.
Many alternatives are available. But if you want to protect yourself and your family and your purchasing power, I think that's all you can do. Because, basically, you have to save yourself. The government's not going to help you.
Yeah. There's a couple more ones here. One that we'll probably gloss over, but I'd like to know your thoughts on the actual scale of the problem. Is non-discriminating banking. How much of a kind of problem is that in the UK? And what are your thoughts on that? I don't know how they would go about it, but what's your thoughts?
It's surprisingly large. So we've given evidence to the all-party parliamentary group on this. We know that a very large number of banks in the United Kingdom restrict transfers to and from cryptocurrency exchanges. And also a very large number of people have had their accounts closed for transferring money to or from perfectly legitimate and in many cases regulated exchanges. So Nigel Farage mentioned this on stage. And in fact, one of our first communications in public with Andrew Griffith when he was Economic Secretary to the Treasury was around the fact that Chase Bank had decided to stop any and all payments to and from legitimate cryptocurrency exchanges. And I think the two things are going on here. Firstly, there is perhaps a well-meaning desire by banks to minimize customer harm. And if that's the case, fair enough. A second thing that's often missed, I think, in discussions here is that your listeners may be aware of APP fraud. It's authorized push payment fraud. Now, in the case of authorized push payment, you might have made a bona fide payment to someone who turned out to be fraudulent. If that happens, you do then actually have a claim against the bank. And until recently, that claim was pretty large. I think it was up to $450,000 you could have claimed from the bank. That level has recently been reduced. But I think the fact that that existed made a lot of banks' risk and compliance teams very worried that they were exposed to enormous levels of risk. So we may, in fairness to banks, we may see a bit of a loosening of that restriction. But I think as a general point, and Nigel Farage was himself subject to debanking when he lost his account at Coutts. As a general point, this is a fairly fundamental right. I know of a number of different cryptocurrency businesses in the UK who have had their accounts closed or have had great difficulty in opening accounts. Their CEOs have had their personal accounts closed. That's just awful.
Right.
Which, much as I admire Bitcoin's ability to preserve your freedom to transact, we all still need a regular bank account. Much, much worse in the United States. There was an implicit policy by the Biden administration actually and actively to debank and to close accounts of cryptocurrency businesses. Winklevoss twins, for example, and Gemini, the exchange, have written at quite some length on this.
Some might argue that these are private banks; they can have their own policy on whether people do cryptocurrency, and that is there not an argument for that? That actually, the government having to have a policy in place to make private banks have to accept those that are dealing in cryptocurrencies and stuff. Is that not a fair criticism?
Potentially, in terms of the bank's own terms and conditions. For example, most banks wouldn't, I think, be too pleased if you were to buy, let's say, illicit arms or contraband using their accounts. But I think that the basic principle should be that what you're doing when you're buying Bitcoin from a cryptocurrency exchange is lawful. It's completely lawful to own Bitcoin. And actually, perhaps I should have mentioned this earlier on how the UK is performing. There's a piece of legislation currently going through Parliament which will recognize digital assets as property and valuable and to be protected and worthy of protection in exactly the same way as other forms of property are under English law. So to the extent that the activity is lawful, your ability to transact using your bank account, in my view, should be unlimited.
Right.
The bank's not going to stop me from, stupidly wasting my money on a supercar, for example, which is going to lose 20% of its value as soon as I drive it off the forecourt. That's a lawful purchase, even if it's a stupid one. Why should the bank have the right to stop me lawfully buying an asset that is lawful for me to hold?
Right. So you've already given me so much of your time, so I want to thank you, and I want to tie things up. But in an ideal world, what would your ideal kind of regulatory framework and tax system be for the space in the UK?
Great question. I mean, to be honest, what we've seen from coming out of reform is really not that far away. I think to that I would add the de minimis exemption for payments that we've talked about. I would add some feasibility work on the integration of the Bitcoin mining industry into our renewable grid. So you probably know already that we waste a huge amount of wind power through curtailment, and you and I pay for those curtailment costs in our electricity bills. Already in Texas, we see Bitcoin miners co-located with wind farms, acting as a form of demand response to balance the grid, and as a commercial buyer for power that the grid doesn't want or can't pay for. Given that we have so much wind power in the United Kingdom, whether or not you're a supporter of that or not, It's a fact. And it would be really, really interesting and innovative of us to see whether or not, instead of you and I paying those bills, wasting £1 billion a year simply paying windmills to turn off, whether we could find a commercial solution for that. I think that would be a fascinating thing to do. There's an additional piece I'd like to see from reform, and that was recently articulated in the United States by Tom Emmer. So he has put forward a bill which would protect developers, specifically to state that writers of software, and back to our free speech point that we started the chat with, writers of software are not money transmitters. If someone uses your software to transmit money, that's on them. But it's very important to protect the developers of software and also to protect the rights of those who use that software to hold their own assets. You know, we should have a right to self-custody our money, our possessions, our Bitcoin. And I'd love to see that. I hate the phrase enshrined in law. I'd like to see that, articulated in law. The reason I don't like enshrined is because obviously no parliament can bind a subsequent parliament. So saying something is enshrined is a bit of a fiction. But I'm a lawyer, so I get excited by techie
details. Yeah,
exactly.
Okay, brilliant. Well, thank you, Freddie. That has been really, really interesting. Learned a lot of new things there. The current state of our regulatory system, and hopefully in the future, some good ideas that hopefully get put forward. And
hope so.
Thank you for coming. Thanks for coming back on, and hopefully see you soon.
Very much appreciate it. Take care, Jamie. Have a great afternoon.